Is your mortgage product ending and are you sat on the lender's variable rate? Well, if you don't change this, the likelihood is your mortgage payments are going to increase month on month. Get it sorted to save those thousands of pounds in interest. Hi, I'm Jenny from Your Mortgage Hub, and I'm here to help those starting out or starting over with their mortgage applications by showing you what you should and shouldn't be doing when applying for a mortgage. So are you worried about your increases in your interest rates, along with your energy, your fuel, and your food? Look, rates are going up. There's no getting away from it. We are in a cost of living crisis, and it is causing massive anxiety across the country. I actually don't think there's probably any household in the UK that isn't impacted in some way or another. Lower end incomes are probably more impacted than others, but everyone is feeling the pinch. And if you are sat on a variable rate with a lender or your product is coming to an end, you need to start acting now to reduce those monthly outgoings. Now, luckily, or unlucky, depending on how you want to look at it, the Bank of England, so the Monetary Commission, have delayed their meeting for another week. So this is where they decide what they're going to do with the base rate. So it may be that they put it up or they put it down. But in essence, as mortgage clients, we've brought ourselves an extra week to secure new rates. So it could be that when the Bank of England base rate, if they announce an increase, the likelihood is we will see lenders start to increase their rates. Now, the variable rate that most lenders have as a fall off rate once you've come off a product will probably increase. So if you're sat on that, the likelihood is that may increase over time. So what we need to do is we need to get it sorted now. I've spoken to so many people recently around their mortgage payments and how it's going up and how they want to fix into a longer term deal. And the truth of the matter is we just need to be really proactive now to get that done. We are seeing record high of interest rates for a generation, but that's just because we've had a generation that's had really low rates. So there's a couple of things that we can be doing. First of all, you can secure your rate before your current deal ends. So if you're looking maybe 6 months, that's what you should be doing. That's the first thing. The second thing is, if you are really struggling with the payments, there's things that your broker can do to assist you with that. They're not always long-term solutions, and you may want to change that in the future, but we can look to extend your mortgage term potentially, which can then reduce that monthly payment. You're going to pay more interest, but sometimes we just need that bit of a stopgap at the moment. What I can say is if you are worried about your mortgage payments or your deal is coming to an end, you need to act now and not leave it, because the rates may go up, and if they go up, you're going to feel that on your new mortgage payments. So here are 3 things that I think everyone should be doing if your mortgage product is ended or is coming to an end. Number 1, look, you can secure your rates 6 months before your current deal ends. So that means you could get today's rates 6 months' time. So whatever's happened in that 6 months, you're not going to feel the impact once you've secured your rate. So it's really important that you start to act on it now, okay? This can be done via a broker, or you can go to your current lender. The problem with going to your current lender is you're only going to get their one rate and their one set of criteria. If you go to a whole of market mortgage broker, we'll search the right market or the whole of the market for you. Number 2, if you are remortgaging away from your current lender, you will need a solicitor. Many lenders will nominate their own solicitors, and they will usually cover the cost of that as well. If you want to use your own solicitor, sometimes there's some cash back to be had, but if I'm honest, it's probably not going to cover what it needs to in regards to your local solicitor or your own solicitor. So you may have to put your hand in your pocket to pay towards some of that, but it will cover a good vast amount of it. Free legals are a really good way to get from A to B if it's a really basic sort of like-for-like mortgage. If you start adding people or taking people off the mortgage, then I would probably say a local solicitor or a more specialised solicitor is probably right for you. And number 3, like I say, we've brought ourselves a week, guys, so let's act on it. The Bank of England Monetary Commission will not meet for a week. Well, it's a week Thursday they meet, and that's when they'll make any announcement to any changes of the base rate. And once they do that, we may see lenders starting to react to it. So use this week wisely. If your mortgage product is ended or coming to an end, secure the rates now. So to recap, the three things I think everyone should be doing is: one, secure your rate 6 months before. As soon as you're able to start looking at mortgages and securing the rate, get it done. Don't wait until the rates have increased. Number two, a lender will need a solicitor. You can use your own solicitor, but most lenders on a remortgage will pay for it, but you have to use their nominated guys, really. And number three, bought yourself a week with the Bank of England's base rate delay. If it goes up, it's going to impact on the rates. So make the moves now rather than waiting for that to happen. So guys, I guess what I'm saying is don't sit on the standard variable rate, or wait for Bank of England to make a decision. Act on it now. And if you need help doing that, just drop me a message below. We can have a call and see how I can help you secure those rates sooner. And as always, if you want more hints and tips on what you should and shouldn't be doing when it comes to applying for a mortgage, just check out my page.